Hello, ladies and gentlemen. Good morning to you. Please do me a favor by confirming that you can see my screen and you can hear my voice clearly by typing hi in the comment section so that we can get this started. So please do me that favor. So I want to confirm we're all on the same page. Hey, innocent babes, to first to come in here this morning. Good morning to you, innocent babe. How are you doing today? All right. Hello, Howden92. Good morning to you. Yes. Gold kicked you out. Of course, definitely. I don't know if you you follow my advices whenever we are doing counter trend trade. So whenever we're doing counter trend trade, we always try to lock in our position so that we don't get caught out in any sudden pullback. So as you are going to the downside, you should have moved your stop loss accordingly to protect your position as price was actually going down. So it's okay anyways, you're going to make it back. Good morning. All right, Aladdin 92, good morning to you. 74 Mike, good morning. 922, good morning to you. Hey Carrie, good morning. How are you doing today? Glad to have you around. Okay, great. So I'm welcoming you to yet another promising session of Extreme Speed Live, hosted by myself, Sheriff Daramola. And as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. And in addition to that, if you have pairs you want us to look at, you have commodities, options, cryptocurrency, you want us to look at, I'll try as much as possible to inculcate them in my plans for today. So all you just need to do is drop this pair in the comment section. And before we go into the details of what our expectations are today, the first thing we normally do is to look at how well the pairs we have been monitoring since Monday have been doing so far, after which I will be making my commentaries and my thought process on how I intend to manage these trades. So without further ado, let's dive into the chart and let's see what is happening. And before we go into the details of what is happening in the market right now, the first thing I want us to look at is the economic calendar. And the reason why that is simply because we have a major event, I think two major events coming up today, which is likely going to have a significant impact on price movement. And I think we are beginning to see that impact already as participants anticipate this report. So in the next 1 hour, we're going to be having the ADP employment change, which is coming up in an hour's time from now. And then we have the ISM services PMI also, which is coming up in 2 hours time. So we want to get ourselves prepared, and I can categorically tell you that price action, price movement in the market is already anticipating this event. So let's go into the chart right now, and the first pair we are going to be looking at right now is the US oil. Now on the US oil, what was our expectation yesterday on the US oil? So we had this scenario here yesterday. Where were we yesterday? We were around where was that? Okay, we were around the key level at the $85 mark yesterday, where we continue to ride on that bullish momentum that we began the week with on Monday. So since the beginning of the week, we have continued to enjoy this bullish momentum as price has moved over how many pips now? Over 400 pips in profit since the beginning of the week. So for those who have been part of this bullish journey since the beginning of the week, kudos to you. Congratulations to you guys. And the next thing we want to be doing here is to move our stop loss accordingly to protect our position against any pullback. So with that being said, let's go into the higher time frame so that we can have an holistic view of what is really happening in the market right now and this also would be a privilege for those who are not part of the session yesterday and the previous day, so that they can have a better understanding of how we got to the position we are right now. So moving on to the daily time frame here. Well, the first thing we observe on the daily time frame is that price action has been on a very strong bullish momentum since the beginning of the year, and as a result of this, we were able to identify that bullish trend line we can see on our screen after connecting the series of higher lows. And if we zoom into the current structure and look at what has been happening in the last 2 months, we can see that price before the 2 months, we saw this impulse, this bearish trend to the downside. So we were able to draw this bearish trend line, connecting the series of higher lows here. And then the next thing we did here was to identify a very strong and significant key level at the $85 mark. And if we look at the key level at the $85 mark and compare it with what has been happening around this area in the past, we will observe that price has been respecting this area in one way or the other. Look at what happened in the month of August. Participants were here to buy the US oil, and the same thing happened during the early days of the month of September. However, the bullish momentum wasn't really that strong, as we saw price break down that key level during the second week of the month of September, though we had price come back up a little bit, but it was met with stiff resistance from the sellers as price broke down that level finally during the mid-month of September. And since then, we started seeing multiple rejection of this key level, which pushed price right back into the $77 area. And since the later part of last week's trading session, we have seen a climb in price as price has continued to climb right back up. And what we saw here in the last 48 hours now is that we already have a breakout of the $85 mark. And one thing I want to say here is this $85 area is a very sensitive level, as we want to see how price action is going to relate with that level. So that's what we said yesterday, and lo and behold, we finally saw a breakout of that $85 mark with an engulfing candle. So right now, with the current structure we have here, everything on this chart right now is saying bullish. However, we need to be very careful, as the structure around this bearish trend line needs to be monitored and studied very well, so that we can have a better understanding. So what we want to do right now is to scale down to the 4 hours time frame. Before we do that, one thing I want us to know here is this: there is a possibility that we could have a reversal pattern here, multiple rejection resulting into a crash to the downside, or we could be having a breakout of this bearish trend line in such a way that a retest to structure will be giving us a confirmation that price is going to the upside. So we have two scenarios we're going to be looking at on the US oil here. As long as price is around that bearish trend line, which also shares a confluence with the $85 mark, we really need to be very, very careful. So going down to the 4 hours time frame, let's see what is really happening around that bearish trend line. So look at what is happening here on the 4 hours time frame. You can see as soon as price tested, though we had the breakout of the bullish trend line, should I shift these meters a little bit so that we can have a better view of what I'm talking about here? So let me shift this out a little bit so that we can have a clue, a better visuals of what I'm talking about here. So look at what happened here. We saw the breakout of the key level at the $85 mark. Remember, the gold line here is the key level we identified on the daily time frame, and we saw the breakout of that key level with, in fact, an engulfing candle. We had two engulfing candles that took price right out of that structure. Now, as soon as price got to the area around the bearish trend line, which we identified on the daily time frame, we started seeing multiple rejection of the $87 mark, which resulted into a consolidation phase right now, as this could emphasize the indecision that is being in the market at this point in time. So with multiple rejection of the $87 mark, followed by a consolidation phase around this area, And also this structure here lines up with the bearish trend line we identified on the daily time frame. And one thing I told you on the daily time frame is that there is a likelihood that we could be having a reversal pattern within this area that will be crashing price to the downside, or we could be having a breakout of that structure that will be sending price to the upside at this point. So now, in order to get a better perspective into the current structure that we have here, one thing I did was to scale down to the 1 hour time frame. So on the 1 hour time frame, we are privileged enough to see how participants have been relating with the structure since the beginning of the trading session today. That is the London trading session. So we have seen how price has been relating to the structure. So what the first thing I did here was to identify the $87 mark, which is here, and we can see what has been happening since the later part of the New York session yesterday. We saw how this level has been consistently being rejected by the sellers. So every attempt by the buyers to push price right above the $87 mark has been met with stiff resistance from the sellers. So to continue buying the US oil, definitely we want to be seeing price break out of that $87 mark, hereby taking out all the sell position at this point, after which a retest of structure will be giving us a confirmation that price is going to the upside. However, looking at the multiple rejection of the $7 mark, I'm of the opinion that this might be the beginning of a retracement of this impulsive move that started this week. So remember, we had this impulsive move that started this week at around the $81 area, which pushed price right into the $87. So we had the US oil grow with about $7, $6 thereabouts since the beginning of the week. And so since we had this impulsive move to the upside here, and we begin to see multiple rejection of the $87 mark, the question right now is that, is this consolidation phase going to evolve into a retracement into our golden zone area, where we shall be looking out for patterns to join the trend continuation to the upside? So this is what we want to be looking at during the New York session today. And in order to make our job easier here, what I did next was to identify a neckline of this multiple rejection of the structure. And we had a neckline sitting right around the $86 mark, as we can see here. Let me label this level for the sake of clarity. So we have the $86 level here. And so what this simply does is that it's going to be guiding our action as we head into the New York session today. So one thing we want to be looking out for here is, if we have a breakdown retest of the structure, then we might be having a counter trend opportunity that we could be taking advantage of. So if you are someone who feel comfortable in taking counter trend opportunity, well, this might be an opportunity you want to join. So now that we have this scenario here, so I said we want to see price break down the $86 level here, give us a signal, then a confirmation in the form of a retest structure is likely going to be pushing price to the downside. So right now, if price is going to be going to the downside, well, where will our take profit target be? Well, in order to get that, we need to take into consideration this impulsive move. So we had this impulsive move here. So what we want to do right now is to bring out our Fibonacci retracement tool, run it through the previous impulse leg here, and what we want to be doing is to aim at an area between the 50 and the 78.6% area as our take profit target zone, and at the same time a buy window for the second wave of the potential bullish momentum. So let's label this area for the sake of clarity. So we have a TP target here for sellers, for sellers, and at the same time we have a buy zone for the buyers. So we have the buy zone here as well. Let me place this right inside the rectangle. So we have this, and then we have this painted yellow. So let's delete the retracement tool right now. So we have an area between the $84 mark and the $82 area as an area where we want to be placing our take profit target if we are selling the US oil from this point. So in as much as we are selling here, we're still looking forward to a bullish momentum here. So what I'm saying here is that if price breaks down, retests the structure and goes into this area, we want to be looking for buying opportunity right around this area to join the potential rally to the upside. So remember, we had this bullish trend line that was holding price action since the beginning of the week. So there is a likelihood that we will be having a breakdown of that bullish trend line. And if this structure here evolves into a breakdown of the neckline and a further breakdown of this bullish trend line and retest of this bullish trend line, we'll be welcoming another opportunity to add more position to our existing trade. That is for the selling opportunity. But if you are not comfortable with taking advantage of selling momentum and counter trend opportunities, then you want to be patient enough to wait for price to come within the golden zone area here to join the potential second wave of that bullish momentum that began the week with. So this is how we intend to trade the US oil. And another caveat I want to emphasize here is the $87 mark around this area, which has been rejected since the later part of the New York session yesterday. So if we have a breakout of that $87 mark, a retest of structure which shares a confluence with that bullish trend line is likely going to be pushing price to the upside. So we need to be open-minded here, and let's see how price action is going to play out in the next couple of hours. So if you have any question whatsoever, feel free to drop in your comments, your inquiries in the comment section, and I'll be letting you know that I will try as much as possible to shed more light on whatever you really don't understand at this point. So that is that on the US oil. If you have any questions, let me know in the comment section while I move on to the next pair. So I saw something here where Innocent Babe was asking us to do. All right. Oh, I think I missed that anyway. Okay, you wanted us to do Bitcoin too as well. No problem. Let's see how that works as the session goes by. So the next pair we are going to be looking at is the US Tech. And the US Tech, remember we had a very profitable trade on the US Tech on Monday/Tuesday, where personally I took about 300 pips, and I'm very sure you might have taken more than that as price has continued to go to the upside since the beginning of the week. So we had price started the week at around the $10,970 area, though it came down a little bit, and since then it has been finding higher highs. And we can see that as soon as price got into the $11,610 area, we begin to see multiple rejection of that level. And what was our expectation here yesterday? Where were we yesterday? We were around here yesterday. Where were we yesterday? Okay, we were around this point yesterday when we identified the $11,500 area as a significant level to watch out for during the New York session yesterday. And the reason why we identified the $11,500 area here on the 1 hour time frame was simply because of the structure we saw. We saw that area had a memory for selling potential in the past. We saw our participants gathered here to sell the US Tech. So we saw that happen here again during the later part of last month. We saw multiple rejection of this level by the sellers. And one thing I said yesterday is that we want to see how price is going to relate to that area, after which we are going to be making a decision on how to trade. Now, in the last 24 hours now, what we have observed here is an impulsive move that led into the multiple rejection of that area. In fact, price even climbed right above the 11,500. Then we saw price come back. Then price come back, found a higher low. Price was unable to break above the previous high here, and then this resulted into a breakdown of that structure. And if we look into the structure closely, you can see that the structure here appears to be evolving into a reversal pattern in the form of a double top structure. Look at what happened here. We had this impulsive move. price tested the $11,610 level. Price came back into the 11,500, found a higher low as it was unable to break above the previous high. Then we saw price break down the neckline. So one thing we see here is something like a reversal pattern, and the $11,500 area appears to be serving as the neckline of that reversal pattern. So one thing we want to be doing here is to take advantage of this reversal pattern. If we see breakdown, retest of that neckline to join the decline to the downside. But one thing I want to state here is that we are still on a very strong bullish momentum here, and whatever happens from this point is more or less a retracement of that impulse leg that we've been witnessing since the beginning of this week. So what this simply tells us is that we need to take into consideration this impulse leg, and in that regard we bring out our Fibonacci retracement tool, run it through the impulse leg here, and we aim at an area between the 50 and the 78.6% has a golden zone area, and also an area where we are looking for buy opportunity. And if we look at the current buy zone area, it also shares a confluence with the $11,200 mark, which has been our yardstick for buying opportunity since last week. If you remember, if you were with us last week, you will remember that we've been using this $11,200 level as our yardstick for any buy opportunity, as it lines up exactly right above the demand zone, which we identified on the higher time frame. For those who are not part of the session last week or earlier this week, let me scale up to the daily time frame so I can show you what I'm talking about here. So despite the fact that we are on a very strong bearish momentum here on the daily time frame of the US tech, we can see how the $11,200 area has held price supported by the buyers in the last 3 to 4 months now. So we saw the first touch here in the month of June, then we saw something close to that area in the month of July, and then what we noticed in the month of, in fact, throughout during the later part of the month of September, we saw our price buyers rejected this level a couple of times, though we had a false breakdown here, and since then price has continued to find higher highs. And what this simply tells us is that the demand zone here is quite strong. So following the advantage we took here on Monday, we took advantage of this bullish momentum here. We're still going to be, we are looking forward to a possible retracement back into the buy zone here. So if you had missed that opportunity on Monday stroke Tuesday here, if you had missed that opportunity here on Monday, let's see if the market is going to give us a second chance in the form of a retest of structure, after which we are going to be looking out for patterns on lower time frame that will be supporting a trend continuation to the upside. So if you're a counter trend opportunity, you might want to be taking advantage of the sell momentum right below the $11,500 area. Anywhere right above the $11,500, it doesn't seem suitable to be selling. So right below the $11,500 area is where we want to be looking out for selling opportunities. So a breakdown retest of the structure confirms that reversal structure. So if you're comfortable taking counter trend trades, you could actually join right below the 11,500 level. And as price moves accordingly in our favor, you want to be moving your stop loss to protect your position against any sudden pullback that is likely going to be happening around this area. So that is that on the US tech. If you have any questions, feel free to drop in your inquiries in the comment section, and of course I am willing to help shed more light in whatever that appears to be a little bit clumsy for you anyways. Okay, all right, let's see what's happening in the comment section. Okay, greetings to you all. Siska says he can hear clearly. I would suggest you restart your app, switch off your app, and then restart it all over again. I'm sure you will get a better audio quality. Okay, all right, so Let's move on to the next pair. So what's the next pair we're going to be looking at today? Let me see. I think it's the gold, right? It should be the gold. Okay, it's the USDJPY. Now, on the USDJPY, we have been in 2 consecutive losses on this USDJPY, and this is as a result of the expectation of a bullish momentum here, which never happened. And during the course of yesterday's trading session, we saw a bearish signal at this point. And the citation of that bearish signal is something that called my attention as we saw the final breakdown of this temporary demand zone, which we identified here on the 1 hour time frame. So we saw the breakdown of the structure, and from a technical standpoint like this, whenever we cite a breakdown of structure, we expect that price is likely going to come back and do a retest of structure, where we're going to be looking out for patterns on lower time frame to join the decline to the downside. So with this being said, the first thing I want to do here right now is to scale up to the higher time frame so that we can have an holistic view of what is really happening here, and also for those who are not part of the session, our previous session, so that they can get a view of what we are talking about. So let's go to the daily time frame. It won't take too much of our time. So on the daily time frame, even though the USDJPY has been on a very strong bullish momentum, as we can see, after connecting the series of higher lows here to give us that resultant bullish trend line, as you can see, price has consistently respected that bullish trend line. But something here caught my attention in the month of July, where I saw this double bottom structure here. We saw this impulsive move to the downside, coming right down into the bullish trend line. And then we saw price climb up into the 135 Japanese yen area, evolving into a double bottom structure, where the 135 Japanese yen area is the neckline of that structure. Then we cited a breakout of that structure, and since then price has not come back to do the retest of that neckline. You know, from a technical standpoint, we expect that whenever we cite a breakout of a neckline like this, we expect that price will come back, do a retest of that structure of the neckline area to push price to the upside. But since the breakout happened in the month of August, we are yet to see price come back into that neckline. Now, something interesting happened since the beginning of the last month's trading session. We saw that as soon as price got into the 144, is it the 145 Japanese yen area, we saw how sellers restricted all buying momentum here. Every attempt by the buyers to break above this level was met with severe resistance from the sellers to push price to the downside. So what we saw throughout the month of September was multiple rejection of the 145 Japanese yen. Now, the opinion we had during the course of last month's trading session was that, well, this consolidation phase here, that the multiple rejection here, which evolved into a consolidation phase, which is more or less an indecision in the market right now, results into price coming back to do either a retest of the neckline or the bullish trend line we identified here, with the intention of inciting a trend continuation. So this is what we've been hoping for since last month. However, if we scale down to the 4 hours time frame, we begin to see things more clearly here on the 4 hours time frame. As you can see, I was able to identify a supply zone right around the 145 Japanese yen, and as you can see, since last month, we see price continue to trade right below the supply zone here. What does it tell us? It tells us that the sellers are very strong at this point. Though the buyers are still there, but the sellers are making sure that the buyers does not break above the 145 Japanese yen area. And what happened during the course of last week's trading session was quite interesting, as we saw price was caught within a channel between the 145 and the 144.200 area. So we saw our price was caught within the channel last week. Then we saw a breakout of the structure during the early days of this month. At the beginning of this week, we saw the breakout of the structure, which suggested that we should be looking for buying opportunity if price respects this bullish trend line, and price respected it one more time and it went up into the 145, but it took us out of our position yesterday as we saw an engulfing candle that broke right through that bullish trend line we identified here, also breaking down the support level at the 142.00 level of that channel here. So what this simply tells us at this point is that the sellers appears to be gaining the momentum they've been seeking in the last 1 month. Now, in order to trade the USDJPY this today, what I did here is to identify a sell window where I want to be looking out for selling opportunities. And how did I identify the sell window here? Well, I took into consideration this impulsive move, this one that started here down into this area. I think I took two impulsive moves. I took two impulsive moves to consider that. So the first one here and the second one here. So what I did now is to bring out my Fibonacci retracement tool, run it through the previous impulse leg, and what do we have? So we have our sell window right between the 178 and the 144.500 area. And with that being said, remember we had the breakdown of the bullish trend line here. So I said, okay, fine, if price comes back within this area, I want to be selling. And I already got my position triggered as at the time I was about to start the session here, as price continued to reject this area at the 144.500 area. So there is still a likelihood that price might still climb up into the 145 Japanese yen area. So because of this, I've moved my stop loss right above the 145 area, which is about 50 to 55 pips thereabout. So if price still comes right above this area, coming into this area, we're still going to be having something like this to push price to the downside. So let's see how price action plays out in the next couple of hours on this one. For me right now, I will not be buying the USDJPY unless I see a breakout of the 145 Japanese yen area. And one thing I want to see is a significant breakout of that structure where we have an engulfing candle closing right above that area. And if that happens, remember, we don't want to get too excited. We want to wait for price to come back, do a retest to structure, which might also share a confluence with that bullish trend line which we identified here on the 1 hour time frame. Look out for patterns on lower time frame to join the rally to the upside. But if that does not happen, my sell bias is still going to be very, very valid here. So in that regard, we have the 144.700 area as that below that area as an area we want to be selling the USDJPY. So as long as price remains right below the 144.700 area, we want to be looking for selling opportunities on this pair. So this is how we tend to trade the USDJPY today. If you have any question, let me know so that I can shed more light on this. So it's a very simple setup we have here on the USDJPY. We have a breakdown of structure, price breaks down, we look forward to a retest to structure, look out for patterns to join the decline to the downside. So that's how we intend to trade the USDJPY. Hello, Scott Benji. Good morning to you. Hello here. What is the explanation? Okay, 238. Okay, what we simply do here on a daily basis is to analyze the financial markets using technical parameters to identify trading opportunities that we could take advantage of during the New York session. So the New York session will be starting in, I think, an hour's time. So what we do is to prepare ourselves in that regard. So we come here. If you have a pair, if you have a commodity that you want us to look at, you share it in the comment section. Then we project it on the screen, we analyze it, make our decision, and get ourselves prepared for the New York session. So that's what we simply do here. 238. Okay. Okay. All right, so let's move on to the next pair. So the next pair we are going to be looking at is the XAUUSD, which is the gold. I hope Innocent Baby is around. So let's look at what is happening on the gold. So yesterday, where were we yesterday on the gold? We were around the $1,705 area. We were around here yesterday. And one thing we said here is that we want to see how price is going to relate to this bearish trend line, after which we want to make a decision if price is going to break above that bearish trend line, or is price going to have a reversal pattern right below the bearish trend line. So these are the scenarios we were expecting yesterday. Either a reversal pattern right below to send price to the downside, or we could be having a breakout of that trend line where a retest to structure will be sending price to the upside. So that is scenarios we are looking forward to. And one thing we did when we scaled down to the 15 minutes time frame, we identified the $1,705 level around this area, and we said if we have a breakdown retest of that structure, we want to be joining the decline to the downside here. And we had the breakdown of structure. Price came back, we joined, and price continues to go back to the upside, and we were taking out of our position. So like I told Innocent Babe this morning, whenever we are taking a counter trend trade and you price moves in our direction, we want to move our stop loss accordingly to protect our position. So if you had done that, your loss would have been minimal yesterday, but it's okay. Things are still going as expected anyways. Now let's go into what our expectation is going to be like for today. Well, as we can see, since the beginning of the week, price started the week at around the where 11,000 no $1,660 area. So we saw a little bit of consolidation phase around here before we sighted that breakout of structure, which led into the breakout of the very important key level we identified on the higher time frame at the $1,680 area. And I told you that personally I missed this trade as I didn't have the opportunity to join this rally, as I was actually waiting for a breakout retest of the structure to join the rally, but that did not happen as price continued to find higher highs and higher lows. Now let's scale up to the higher time frame. Let's see what is happening and how we got to this point in the market. So going up to the daily time frame, the first thing we observe here on the daily time frame is that price has been on a strong bearish momentum since the beginning of the year, and this is evident after connecting the series of lower highs here. So we had this lower highs to guide our action since the beginning of this year. And one thing I made mention of yesterday was that when we zoom into the current structure here, the next thing we did was to identify this key level at the $1,680 area. And as you can see, this key level has been a major determinant of price action. In the month of July, it was a demand zone. Then if we fast forward to the first days of the month of September, we saw how this area was also a demand zone, but the momentum by the buyers wasn't that strong as it was met with stiff resistance from the sellers to push price to break down that key level one more time, where a retest of that structure sent price crashing into the $1,615 level. And one thing I made mention here yesterday was that considering the fact that this the gold has been on a long-term bearish momentum, we want to see how price is going to relate to this bearish trend line yesterday. So that was where our focus was. We wanted to see how price is going to relate with that bearish trend line. That is, are we going to be seeing a reversal pattern, that is rejection, multiple rejection of that trend line to send price crashing to the downside, or are we going to be seeing a breakout of the structure where a retest will be giving us further confirmation to join the rally to the upside? So now what happened yesterday? Let's scale down to the 1 hour time frame. So on the 1 hour time frame, what we observe is this. Remember, this is the bearish trend line we identified on the higher time frame, and we also have a key level at around the $1,725 area, which is also right around the bearish trend line. So we had this bearish trend line here, and we had price right around the $1,725 area. And one thing we observed during the course of the New York session yesterday was that we had multiple rejection of the $1,725 level, giving us a clue that the sellers might have come into the structure. So the multiple rejection of that level is giving us a clue that sellers are actually gathering here to sell the gold. Now, after citing this, the next thing I did here is to look at what the structure here is evolving into. And if we look at the structure closely, we can see we have the first touch of the 1,730. Price came back into the 1,700 and is it 18 years. We found a higher low, resulting into a reversal pattern where a breakdown of that structure is giving us a confirmation of a mature reversal pattern. And whenever we cite a reversal pattern like this, especially in the form of a double top structure, we want to be identifying the neckline that we shall be using as our yardstick going forward. So in order to make our job easier, we have a neckline sitting right around the $1,718 area, which I'm about to label for the sake of clarity. So we have the $1,718 level. Okay. Let me place that. All right, so that's our neckline right now, and what we have seen right now is that price has broken that neckline, and that is a huge signal for us to sell the XAUUSD. Mind you, this is going to be a counter trend trade, and the reason why I said it's a counter trend trade is simply because if we look at what has been happening since the beginning of the week, we can see that we already have a bullish moment. In fact, if we zoom into what has been happening since last week, price has been moving to the upside. So it has been a very strong bullish momentum since last week trading session. So if we are going to be selling here, it's more or less a counter trend trade. So if you are comfortable taking a counter trend trade, then you could be looking to take advantage of price right below the $1,718 area. However, if you are not comfortable taking a counter trend trade, then we want to be patient enough to wait for price to come within the key level, which we identified on the higher time frame, to look out for buying opportunity. And if we look at the structure here, we saw this impulsive move. We saw the breakout of the key level here at the $1,680 level. Price breaks out of that key level, and whenever we cite a breakout of structure like this, we expect that price will come back, do a retest of that structure with patterns that evolve into a reversal pattern on lower time frame to join the trend continuation to the upside. So that is what we are looking at from a technical standpoint. And to make our job easier during the New York session, I was able to identify a buy zone area here after bringing out my Fibonacci retracement tool, running it through the previous impulse leg here, and then we have an area sitting right within the 50 and the 78.6% of that previous impulse leg. And if we do that, we have somewhere between the $1,700 area and the $1,675 area to look out for buying opportunities. And if you are selling right below the $1,718 level, we want to have our take profit target sitting right around here, which will be dovetailing to over between let's see how many pips that is from this point. So we have a minimum of 2,500 pips to a maximum of, let's say, 4,300 to catch here if you are doing the counter trend trade. Now, if we are going to be buying, we wait for price to come within this area, probably reject the key level here, or probably evolve into a reversal pattern. Then we look out for opportunities on lower time frame to join the rally to the upside. And if we are joining the rally to the upside, where will our take profit target be? Well, we are going to be using the previous impulse leg here as our yardstick, as we want to project this impulse leg into the future. And if we do that, we should be having something like this. Let's use our Fibonacci extension tool, run it through that impulse leg here. Then we aim at somewhere between the 127.2 and the 1414 area as our take profit target. So we have somewhere between the $1,760 area and the $1,745 area. So we have a TP target here, okay, which will be dovetailing to, let's see how many pips, minimum of, let's say, 5,000 to a maximum of about 6,500 pips. So let's see how price action will play out in the next couple of hours on this one. So personally, I'm already in the sell position here, and I've moved my stop loss to break even to protect my position. And if you part of this trade, you took advantage of this trade, then definitely you want to be moving your stop loss to break even and have your take profit target within this area. So if you are waiting for the buy opportunity, we wait for price to come within the buy zone here, look out for reversal pattern, then we can join the rally to the upside. So that is that on the XAUUSD. If you have any questions, feel free to drop it in the comment section as usual, and I will be willing to be of help. Innocent baby, you're welcome. I'm glad you found it useful. 2018, I'm glad you also found it useful. All right, who else in the house? Okay, how does this app work? 194 is asking how does it work. Well, what we do here, Xtrend is a trading app where it's a trading platform where you can trade the financial market. But this session you are in right now is an avenue where traders come together. We come here, we analyze the financial market using technical parameters. Then we use this analysis to determine and plan for how we intend to trade this pair during the New York session. So every day, 11 a.m. UTC, 10 a.m. UTC, we normally come here to analyze the financial market and get ourselves prepared for the New York session. That's simply what we do here. So, and I hope to see more of you in the future. So in the absence of no question, I guess we just have to move on to the next pair. Okay, 2512. Okay, I'm glad you are happy. All right. Okay, so let's move on to the next pair. So the next pair we are going to be looking at today is the CHFJPY. And what has been happening on the CHFJPY in the last 24 hours here? So looking at the CHFJPY, we can see what is happening. We have a selling momentum here on the CHFJPY. Let's delete this and let's replay what our expectations were yesterday. So as at yesterday's live session, we were around here. Sorry, we were around here. Where were we? Okay, we were around the 146.500 area yesterday. And if you remember, we took advantage of this bearish opportunity here on Monday, where I told you we closed with about 80 pips after we started seeing multiple rejection of this level. And one interesting thing about the breakdown of that structure is that it's more or less a bearish signal. And remember, we've been expecting this bearish signal since last week. So we saw this move on Monday stroke Tuesday. And one thing I said is that if you had missed this move, this breakdown of structure, the next thing we want to be doing is to see if price is going to give us a second chance. And the second chance is likely going to come in the form of a retest of structure, where we're going to be looking out for patterns on lower time frame to join the decline. Now, in order to make our job easier yesterday, one thing I did was to identify the sell window around between the 146.800 area and the 148.00 level, where we are going to be looking for selling opportunities. And personally, I took advantage of this trade during the New York session yesterday, and as we can see, price has been rejecting that sell window. As we can see, the rejection here portrays that there is a selling momentum, there is selling pressure around this area. So because of this, I'm looking forward to selling the CHFJPY. Now, for those who are not part of this session yesterday or the previous days before today, let's quickly look at what is happening on the higher time frame and how we got to this point. Now, if we scale up to the daily time frame here, you begin to see things more from an holistic perspective, and this will also help you in making that decision on the lower time frame. Now, look at what is happening here on the daily time frame. We can see that price has been on a very strong bullish momentum since the beginning of the year. But something interesting happened during the month of June, between the month of June and the early days of the month of September. As we can see how the 144 Japanese yen level has been a major selling niche for participants in this market. You can see between the month of June and the month of September, we saw how that area has been a very strong selling niche. Anytime price comes within this area, it was met with stiff resistance from the sellers. So buyers were trying to push price up, but it was not possible until the early days of the month of September, where we witnessed the breakout of the structure here. And from a technical standpoint, whenever we cite a breakout of structure, what do we expect? Of course, we expect that breakout will lead into a retest of structure where we want to be looking for another opportunity to join the rally to the upside. Now, this is where it becomes interesting. This impulsive move here took price to the highest point the CHFJPY has ever been since 1980. So we saw price climb to as far as the 151.700 area. And what happened when price got to this area? We started seeing multiple rejection of this level, giving us a clue into the strength of the sellers at this point. Then what happened 2 weeks ago was quite massive after the intervention of the Bank of Japan to help mitigate against the risk of further decline of the Japanese yen. The Bank of Japan intervened in the forex market, and this resulted in this engulfing candle. And remember, we took advantage of this move. I think we took about 400 pips here, and price came back into the previous structure that was broken here, and we saw a retracement back into this area. Now you will see that the multiple rejection of the supply zone here turned out to be a reversal pattern, and that is, we had this move like this. We had the first touch, price came down. We had the second touch, and when we had the breakdown of the neckline. I think things are more clearer on the 4 hours time frame. So let's scale down to the 4 hours time frame here. And this is what we have on the 4 hours time frame. So we had the neckline at the 148 Japanese yen. So we saw price, we saw this double top structure. We saw the breakdown of the 148 Japanese yen. Price, we identified a sell window around the neckline area, because whenever we cite a breakdown of neckline, we expect that price will come back and do a retest of that structure, which it did last week, and we were able to take about 130 pips here last week. Remember, we took this move to this area last week. And then the beginning of the week, I think we'll see that clearly on the 1 hour time frame. So at the beginning of the week, we saw this impulsive move to the downside, breaking down that bullish trend line, which we identified here on the 1 hour time frame. We saw the breakdown retest of the structure, and price came to as far as the 145.190 level. Now, the second chance we are waiting for is to see price come back into the sell window here at around the 147.400 area, where I said I want to be looking out for a reversal pattern here to join the decline. And like I told you, I'm already in this trade. And if you are not in this trade, if you are in this trade, kudos to you for being on standby to take advantage of that move. And if you are not in this trade, I will be advising you that anywhere below the 147.400 area is most appropriate for us to be selling the CHFJPY. So as long as price continue to oscillate right below the 147.400 area, we want to be looking for selling opportunities here, as this area also shares a confluence with the bullish trend line that was broken during the early days of this week. So as you can see, so we are looking forward to do this. And if price break down the 146.500 area like this, hold on a second, let me extend this out a little bit. So if price breaks down the 146.500 area, a retest of structure should give another opportunity to add more position to our existing trade. So that's how we intend to trade the CHFJPY during the New York session today. I hope I was clear enough to give you all the possible scenarios that is likely going to be happening on this pair. Now, there is a caveat to this. Remember, I told you that the 147.400 area below that level is an area we're going to be looking for selling opportunities. Now, considering the long-term bullish momentum here on the CHFJPY, If at any point in time during the New York session we have price break right above the structure, then we want to be seeing this as a bullish signal. And remember, we are not getting too excited when we sight such a signal like this, as we want to wait for price to give us further confirmation, which is likely going to come in the form of a retest of either the 147.400 area or the bullish trend line, which we identified here, after which we look out for patterns on lower time frame to join the rally to the upside. So this is how we intend to trade this. So we need to be very mindful of how we go about this. So we have a breakout of structure will give us a bear bullish signal, and anything right below the 147.400 area is a sell. So that is that on the CHFJPY. If you have any questions, feel free to drop in your inquiries in the comment section. So while I move on to the next pair, I will be looking in the comment section intermittently to see if there are any inquiries so far. So now the last pair we're going to be treating is the AUDUSD, which was introduced to us on Monday by Steamroller, I guess. So here is what we have on the AUDUSD. I took advantage of a sell opportunity here on the AUDUSD, and I'm in profit already, and I have moved my stop loss to break even accordingly to protect my position on this one. So if you are part of me on you are with me on this trade, kudos to you for being on standby to take advantage of that. And what are we going to be looking out for today? Well, the reason why I'm selling here, I will show you. Look at the structure we have here. You can see that this is a long-term bearish momentum on the AUDUSD. And since last week, we have seen our price has consistently rejected the 0.65100 level. You can see every attempt by the buyers to push price to the upside here was met with stiff resistance from the sellers since last week. And we can see how this level has held all selling momentum here. And one thing I said yesterday was that the trend line here, the dotted trend line here, is going to be our yardstick. And that if price breaks below that trend line and comes back to do a retest of that trend line, I want to be selling. Now, price broke down that trend line. We had a breakdown, and in fact, we had multiple rejection of that same 0.65100 level, and that is why I sold the AUDUSD. So I moved my stop loss to break even. And the reason why I moved my stop loss to break even is because of the reversal pattern we identified on the higher time frame. So I will show you that in a moment. So we scaled up to the 4 hours time frame. So we have a reversal pattern on the 4 hours time frame here. And the 0.65100 level appears to be the neckline of that reversal pattern. And I'm not going to be buying the AUDUSD unless I sight a breakout of the structure. So if a breakout of the 0.65100 level happens, then I want to see that as a signal. Then I wait for price to give me a confirmation in the form of a retest of structure. So it could be a retest of this trend line or a retest of the structure here, where we look out for patterns on lower time frame to join the rally with a take profit target sitting right around the 0.6700 level. One thing I want to state here is that if a breakout retest of 0.65100 level happens, this is more or less going to be a retracement of the previous impulse leg. And the reason why I said that is this. If we look at the structure here on the AUDUSD, we can see we had a demand zone right at the 0.6700 level. We see our participants gathered here to buy the AUDUSD. We had another one in the early days of the month of September before we cited the breakdown of the structure. So if price breaks down the structure, what do we expect? We expect that price is likely going to come back and do a retest of that structure. And we have a retest in the form of this, which also lines up with the bearish trend line we identified on the higher time frame. So you can see we have a confluence to work around with. So if we have our take profit target sitting at around the 0.69700 level, we want to be looking for how price is going to relate to that level. Are we going to be having a reversal pattern here to push price to the downside, or are we going to be having a breakout of the 0.6700 level where a retest of structure will be sending price to the upside? So these are the things we want to be looking forward to on the AUDUSD. So if a breakout of the 0.65100 level happens, we want to be looking forward to a retracement back into the structure that was broken a couple of weeks ago. However, if that does not happen, I'm going back to my 1 hour time frame, and price continues to oscillate right below the 0.65100 level. Like I told you, I'm already in this trade, and if you want to join me, you can join me right now, as price is still right below that level. So if at any point during the New York session today, price breaks down, hold on a second, price breaks down the 0.64600 area, a retest of the structure should give us further confirmation to add more position to our existing trade. So we have a take profit target sitting right around the 0.63500 area. We should be dovetailling into a minimum of 140 pips to catch here. So let's see how price action is going to play out in the next 24 hours, and definitely we shall be coming back here tomorrow to do a recap and share some commentaries in that regard. So that's for today. So we are able to treat US oil, US tech, USDJPY, XAUUSD, the CHFJPY, and the AUDUSD. That's like 7 pairs for today. So we have quite a lot of opportunities lining up for us on the New York session today. So let's run through what we've done so far. Let's do a recap before I finally call it a day. So the first pair we looked at today is the US oil, and what was our expectation on the US oil? So we have the scenario here on the US oil where price has been on a bullish momentum since the beginning of the week, and in the last 24 hours, we saw our participants in this market have been rejecting the $87 area here, and we can see when price came into this level, we started seeing multiple rejection of the $87 level. And because of the rejection of the $87 level, I was able to share with you two possible scenarios that's likely going to happen here. Well, the first scenario is a reversal pattern considering the multiple rejection of this level by the sellers, and that's going to be if price breaks down this neckline here at the $86 mark. We had the level here at the $86 area, if you remember. So I said if price breaks down, we have a retest of structure, we have a breakdown, retest of the structure. We want to be joining this counter trend trade right back into somewhere between the $84 area and the $82 area, where we want to be looking for buying opportunity. So it's a counter trend trade, and if price moves up in our favor, we want to be moving our stop loss accordingly to protect our position against any sudden pullback. So that's the first scenario I shared with you here on the US oil. Then the second scenario is if price decides not to go down, that is, price decide not to go below the $86 level, and price continue to climb up to continue the trend continuation, then a breakout of the structure will give us a signal, after which we wait for confirmations to happen in the form of a retest of the $87 mark, after which you want to be joining the trend continuation to the upside. So those are the two scenarios we are looking forward to on the US oil. And if a breakout of the $87 happens, retest of structure, if you are still in this trade, this could be an opportunity to add more position to the existing trade. So that's that on the US oil. Then we went on to talk about the US tech and what was our expectation on the US tech. Well, looking at the US tech here, we're also very profitable on the US tech. We took this move right from this point yesterday on Monday, and price moved about how many pips? About 600 pips, over 600 pips in our favor since Monday. And one interesting thing happened during the course of yesterday's trading session. We started seeing multiple rejection of the 11,600 area, and what this tells us is that sellers are probably coming into this market at this point. That is, those who took advantage of this bullish move are probably doing quick sales to take some profits from the trade they have taken since Monday. So if that is happening right now and evolving into a reversal pattern, then definitely we want to have the $11,500 as our neckline to guide our action going forward. So what I said is that a breakdown, we had a double top structure like this. A breakdown retest of the structure should give us a confirmation to join the decline to the downside. And we already have a breakdown of the 11,500 area. Hold on a second, let's see. So we already have a breakdown of the $11,500 area like this. So we already have a breakdown, and you might want to be selling at this point right now, as price has already retested the $11,500 area with a take profit target sitting right around the $11,200 level. Now for the trend, if you're a counter trend trader, you could take that trade. But if you are not comfortable taking counter trend opportunities like this, then you want to wait for price to come right back into the $11,200 area, which I've identified as our buy zone area, after taking into consideration this impulsive move. So we had this impulsive move, we ran our Fibonacci retracement tool through the impulse leg here, and we identified an area between the 50 and the 70.6% of that impulse leg as an area we want to be looking forward to buying opportunity. So if price comes within this area, we want to look out for reversal patterns on lower time frame to join the rally to the upside on the US tech. So we have two scenarios. We have a counter trend and we have a trend continuation pattern here on the US tech. So that's that on the US tech. Then we went on to talk about the USDJPY. And on the USDJPY, price is already moving in our favor, as we had multiple rejection of that sell window and price is moving in that direction. Remember, I told you I moved my stop loss to break even at this point after the execution, and let's see how price plays out. And the reason why we are selling this, the USDJPY, is simply because of the fact that price is within a very strong sell window, which we identified on the higher time frame. Let me show you one more time. So we had a sell window identified on the, is it okay, on the 4 hours time frame, I guess. So we have it on the 4 hours time frame here. So we can see we had a sell window every time price since the beginning of last month. Anytime price comes within this level, we saw how sellers took advantage of this and pushed price to the downside. So we've seen that since last week, price has been within the sell window, and because of this, we're looking forward to selling the USDJPY. And in that regard, what we saw yesterday was also a very good signal for a sell momentum, as we saw price break down that bullish trend line. So we saw the breakdown of that bullish trend line here, and then we said, okay, fine, if price breaks down, we wait for price to give us a second chance in the form of a retest of that bullish trend line. Or anywhere around here is good to be selling the USDJPY. So because of this, I have my stop loss right above the sell supply window here, which dovetails to about 50-55 pips thereabout. If you can afford this, then you could enter anywhere from here. But if you are not, let's see if price will come back a little bit into this area, then you could take advantage of that selling opportunity from that point. Now we moved on to talk about the CHFJPY, where price is already moving in our favor after citing that bearish signal that happened at the beginning of the week. Though we took advantage of it, we saw this move to the downside. Price came back to do a retest of structure. We identified a sell window around the 147.400 area, looking out for reversal pattern here, and that exactly happened. And then price has continued to go to the downside from here. So if you are in this trade, kudos. And one thing I said here is that if price breaks below the 146.500 area and a retest of structure happens, this could welcome another opportunity to add one more position to our existing trade here. So that is that on the CHFJPY. Then we went on to talk about the XAUUSD, and on the XAUUSD we begin to see selling momentum since the beginning of today, as we saw our participants in this market rejected the $1,725 area, evolving into a reversal pattern here, and we have the $1,718 area as our neckline. So we had the breakdown of the neckline here. I took advantage of this move right here and moved my stop loss to break even to protect my position. And if you are not in this trade, you might want to wait for price to come back to do the $1,718 level to push price to the downside. And if that does not happen, then you want to wait for price to break down this structure here at the $1,705 retest. Then you could join the decline to this area. But one thing we are doing here, want you to know here, is that this decline is more or less a counter trend trade, as we already have a buy zone right around the $1,680 area where we want to be looking out for buy opportunity. And why are we looking for buy opportunity here? The reason is simply because We have been on a very strong bullish momentum in the last 2 weeks on the gold, and this move here is an impulse leg, and I want to see this move here as a retracement of that impulse leg back into our golden zone area, where we want to be looking out for buy opportunity. And for buyers, if you are buying right from the zone, our take profit target remains right around the $1,750 area. So that's that on the XAUUSD. Then we close the day with the AUDUSD as price has continued to go bearish as expected. And I told you that to buy the AUDUSD, I want to see price break above the 0.65200 level. Let me show you that on the 4 hours time frame. Let me show you what I saw on the 4 hours time frame. So we had this move on the 4 hours time frame. Price broke down the demand zone here. During 2 weeks ago, we had price break down the demand zone here to the downside. And whenever we cite a breakdown of structure, we expect that price will come back and do a retest of the structure. And if we look at the retest here, it also shares a confluence with the bearish trend line we identified earlier. So one thing I said is this: for us to buy the AUDUSD, we need to be very patient, as we want to see. Let me show you. Okay, so we saw this impulsive move, and this looks more like a reversal pattern to me. And one thing I said is, if price breaks out of the 0.65100 level, a retest of structure should be giving us a confirmation to join the rally to the upside. But if that does not happen, I am not going to buy the AUDUSD, as I will continue to look for selling opportunities, which I have already taken advantage of. I showed you. But one thing I will also say here is that if the 0.64600 level is broken to the downside during the New York session today, well, a retest of structure should be giving us another opportunity to add more position to our existing trade. So that is that on the AUDUSD, and I think that is all for today. We were able to treat about 7 pairs today, and I really appreciate every single moment I had with you guys. It has been a wonderful moment. Thank you very much, and I want to wish you best of luck during the New York session. And as usual, don't get too excited when you get a signal, a bullish or bearish signal. Don't get too excited. You want to wait for price action to give you a confirmation in the form of a retest of structure before you join the potential rally or decline. And if a retest of structure does not happen to give you that confirmation, simply pass the trade. There are quite a lot of opportunities in the financial markets that you could actually take advantage of. So we don't want to be too impulsive at this point in time. So thank you very much for being around. I look forward to seeing you tomorrow, 10 a.m. UTC, 11 a.m. West African time as usual, and let's come together again to review the financial market and get ourselves prepared against the New York session for tomorrow. Bye bye.